Gold prices have seen a very busy week and a half, as we saw prices decline massively and very fast as we entered the month-end quarter end of September, and then quickly reverse higher. So after seeing a massive range, a massive sell-off, we actually saw a slow recuperation and will settle the week near unchanged on a week that saw a very wide price movement and a very bearish tone. Remember, we did trade through 1500. That was a level that I think many thought was going to be a line in the sand. If we traded south of that, things would start to accelerate. We would see a move that probably would take away all the bullish momentum we've seen over the last 3 months, and that did happen, but it only happened for about 3 days. Once we saw the reversal, once we started getting the weak data from the U.S., once the Fed started seeing expectations of rate cuts for 100% at the October meeting later this month, well, gold started to turn around very quickly. So gold right now sort of getting its sea legs back under it. I wouldn't necessarily say we've totally recouped our losses. We're back north of 1500, which is significant. However, right now the market is now looking at data and looking at Fed policy, whereas before I think it was more of a technical sale that we saw at the end of the month. And if you look at the dollar, how did the dollar and gold relate to each other? Well, on the big picture, you take a step back, they continue to trade one-to-one together. You see higher dollar, you see higher gold, you see modest declines in gold, modest declines in the dollar. That typically doesn't happen. At this point, I think you're going to probably start to see the dollar take a nosedive down if, and it's a big if the Fed has to be more aggressive in cutting in the near term than they had previously expected, and gold will probably benefit from that. So as we look at the dollar right now with the gold, they're moving hand in hand, but look for that to sort of start to separate as we get to the Fed meeting in October and December. Things could look a lot differently. And lastly, let's look at the positioning. Speculators have been very long and have been riding this bullish movement higher. However, they were big sellers on the sell-off at month end. That was probably what started a lot of it, or they were the ones that exaggerated it. Either way, they're probably looking to get back in or got back in once the market reversed, and it did very quickly. So as the market reversed, speculators likely getting back in. It'll be interesting to see the numbers for next week when we get this week's data. That'll show probably speculators, after seeing massive exoduses last week as we hit month end, we'll probably see them recouping, and probably a lot of the reason why gold prices went higher as quickly as they did.